welcome back to the weekly review with me, Nora. All right, now, as we all know, the announcement for the budget 2013 is around the corner on September 28th, which will be tabled by our Prime Minister, Datuk Sri Najib Razak. So what can you expect on this upcoming budget? Weekly review had a chat with one of the analysts to talk more on what can you expect on the upcoming budget. Let's have a look. Results of the healthcare sector is within expectations as hospital operators continues to see sustainable demand growth of 8 to 10% per annum. RHB Research Institute Sendirian Berhad in its research note said the growth will be mainly driven by the rising influence and aging population demographics, growing healthcare expenditure and also increase in the private sector participation. RHB Research said headline figure for KPJ suggests a weaker quarter as the company recorded marginal increase of 0.7% in sequential revenue as compared to the 16.6% increase in IHH's normalized revenue. Nevertheless, KPJ saw a significant 0.9% improvement in quarter 2. Earnings before interest and tax margins of 9.4% as the company controlled administrative and non-operating costs. In the same note, IHH's Healthcare's IHH posted its quarter 2 for its fiscal year 2012 net profit of 404 million ringgit. RHB Research said this figure includes the sale of medical Novena suites and revaluation surplus of some properties held within the group. Moving to the second half of 2012, IHH earnings would be driven by the gradual ramp-up of Phase 1 of the new Mount Novena Hospital and interest savings from the IPO proceeds. As for the rubber glove subsector, results were in line with the research houses but above consensus expectations. RHB Research said Top Glove's top-line sequential growth of 9.9% suggests that it had a good quarter as compared to Kosan, Hartalaga and Adventa. The research house said Top Glove and Kosan recorded a higher quantum of increase in sequential revenue, mainly due to a 9% and 4.8% increase in gloves sales. It said for Adventa, the company reported a slower top-line sequential growth of 2.7% on the back of an upward revision in selling prices and marginally stronger US dollars, while sales volume was relatively flat quarter-on-quarter. RHB Research also said there were a general improvement in margin across the sector as rubber glove manufacturers. It was benefited mainly from a continuous expansion into a higher margin gloves, the decline in latex and natural raw material prices, and favorable forex movements.
I mean, it is of course possible, but I don't think that they have any intentions at this time. I mean, if they want to expand into different markets, say for instance, if they want to do another dual listing in Singapore or perhaps in Thailand, first of all, I think it has to be conducive enough for them to do it. In two sense, first, they probably need to be bigger in order to attract the attention. I mean, IHH is trading at a significant premium valuation compared to the rest of their peers. It's mainly because they have a wider global reach. I mean, through operations in Singapore, Malaysia, and Turkey, and of course, to a smaller scale, maybe in China and India as well. For KPJ, their focus currently is very much in Malaysia, with only 2 hospitals, I think, in Indonesia. Not to do that, they will definitely need to acquire they need to probably go through some M&A route, perhaps with some other hospital operators from different countries, merge and then become a larger entity and then do this sort of corporate exercises to help them fetch higher valuations. In terms of valuations, I mean competitive in what way? For now, okay, KPJ, IHH definitely deserves premium valuations compared to not only KPJ but the rest of the players in the market. Like I said earlier, they have a very clear growth story. They are operating in mainly markets which the demand for healthcare is very, very strong and robust and expected to continue being this way for the next couple of years. Say, for instance, in Malaysia, what you see rising trend in terms of government expenditure, in my view, is pretty high, and government is coming up with various ways to actually invite the private healthcare players to actually participate. This will actually, in order to help them reduce their the government public healthcare expenditure. That's why you see over the last 5 years, there's not many public hospitals which has been opened. Partly of the reason because healthcare budget is really, how to say, sort of putting a strain on the government finances. This is, in my view. With that, I think there's plenty of room, plenty of opportunities. You see the ETP inviting, they want to set up, the ETP, all these are being set up, hoping to achieve, allow private healthcare operators more room to actually maneuver in Malaysia. So Malaysia is a very strong point, which KPJ is currently operating in. Now, for Singapore, which KPJ doesn't have exposure in, Singapore has seen a very strong, steady trend. They are one of the premium healthcare service providers in the entire Southeast Asia. In that sense, what you see is many all the complex medical treatments is within the region can all be found in Singapore, and that is why they have very high medical tourism contribution to their company, which is what IHH is strong at. They also target at the premium segment apart from the higher end medical tourism market. So with that, you can see prices revisions in Singapore. The prices just keep going up. What can we expect? To be honest, I think the government has done quite a bit in allowing in the last ETP. I think the healthcare industry is pretty big. One of the areas which the government is doing is actually to allow, with most of the patents expiring, I think next year and probably following year, what you see is that the government actually allows, is trying to promote a generic drug production in the country. Okay, that is one thing. The other thing in terms of hospital operations, I think government is probably trying. You can see this one. I can't really remember the exact figures. Yeah, because I thought you were gonna call me yesterday. Yeah, but in the ETP, what I can do is if it's not too late tomorrow, I'll send you one of my reports. I think in the ETP, the government has target that by 2020 they want to expect private healthcare operators to actually the number of beds to actually grow by a certain amount. So the figure I can't remember. I will send it to you by email tomorrow if that's okay with you.
Okay. Sure.
Yeah. So so if we take a look at it, one of the key things is government has pretty much done enough, and I think they're doing it through the ETP. I'm not sure if in this budget that they will be doing anything, but of course, being a people-friendly budget prior to the upcoming election, I don't think you will see government reducing expenditure for healthcare, which is has so far been subsidized very much before this election. Yeah, so I think what government is trying to do is get the private sector to come in and help to fill up, help to pick up the excess demand.
All right, there from healthcare sector, we move on to Islamic finance, as Professor Dr. Abdul Ghaffar tells the importance of Islamic finance in the upcoming budget 2013.
Interesting. Okay, that is only part 1, chapter 3. Hello, I'm Nora Taramin and you're watching Weekly Review. I'm reading this book, Money, Islamic Banks and the Real Economy, written by Professor Dr. Abdul Ghaffar Ismail, the special guest who's sitting next to me today on our edition of Weekly Review this week. And he is actually the Professor of Banking and Financial Economics from Research Centre for Islamic Economics and Finance, Econis, School of Economics, University Kebangsaan Malaysia, Bangi. So thank you for spending time with us.
Okay.
Okay, so today we'll focus on the practice and the future of Islamic finance. So the first one would be maybe Professor can actually name the Islamic product that is progressing in the country, and why is this product?
Oh, the product in the market, no, there are many products in the market currently. And if I can name it a few, like say the structured murabahah deposit, or the commodity murabahah deposit, or financing, home financing like musyarakah mutanakisah. And also we have the product, very well developed product or well constructed product like sukuk, which is being accepted globally. On that basis, I think if let's say we use the best and also the most popular among the players among the institution is sukuk, because it is well accepted, especially in the global market.
Right. Okay. And then talking about challenges, because every industry, every business, they have their challenges as well. And in the practice of Islamic finance itself, especially in Malaysia, maybe what are the challenges?
I think
or the hurdles?
I think the issue about the well-developed or underdeveloped financial institution, it depends on the landscape, and the landscapes actually normally is influenced by many factors.
Right.
And one of the factors is the law that govern the financial institution, the regulation that govern, and also the accounting standard, or we call it the infrastructure, accounting infrastructure, and also the human capital, which is very crucial for the development of Islamic finance or Islamic banking industry. Let's say we take for example in Malaysia, if we want to push that the Islamic banking or Islamic finance as the major, probably because we want to achieve the developed country status in year 2020, the aim is to make sure that services sector can have a role.
Right.
So if let's say you want to have the services sector to have a role, so what is our niche in services sector? So now under the ETP program, government have already identified that the niche is in Islamic finance. So how can we move further or move step ahead if you want to compare to other countries?
Right.
So the challenge is on the human capital.
Oh, okay.
Okay, because in the world right now we have many countries that want to be known, or they declare themselves as Islamic financial hub, like in Dubai, in Bahrain, or United Kingdom, Luxembourg, Hong Kong, or Singapore. So let's say we are talking about 5 to 6 Islamic financial hub. So we are talking about the human capital that we have. Okay, and currently how many university or how many higher institutions that offer that course? Okay, the challenge now is we don't have enough human capital, because everybody want to be known as a hub, so they are looking for the people who can work in that industry, Islamic finance or banking industry. So in this, I think we need to do something. I mean, the higher institution have to do something to offer new courses to be tailored with the need of the industry.
Right.
And then not only that, the government also need to give more fund, for example, for the higher institution to offer more courses, and also others also need to do the same, other countries, because currently we are the only probably countries that offer a lot of courses related to Islamic banking and Islamic finance. But what about other countries? So now this is the problem currently, where sometimes the human capital they work, or the people or the bankers work in one industry for a very short period, and then they move to other countries which offer higher salary, for example, a much better benefit than our countries. So we are losing,
Right.
okay, even of this human
expertise
as well. So this is the challenge for us. How can we retain this is the challenge for us, is to retain the good and well-trained bankers in Islamic banking and also in Islamic finance industry. So this is the challenge.
Okay, that was an analyst talking about the expectations of the budget 2013. Don't forget to send in your feedback on our Gmail at weeklyreviewcapital@gmail.com or hashtag weeklyreviewcapital on Twitter. So we're off for another short break. Don't go anywhere. Right after this, we're going to talk about the hotel industry and how you can get high returns on your investment on the hotel properties. Stay tuned with us.